Mira Business FM, Dubai's home of business radio.
It's the morning drive. Here we are again, Friday morning, here at Mira Business FM, and it's 10 o'clock. And that means Jeff Rhodes is with me, a principal consultant from Rhodes Precious Metals, talking gold, silver, and all the other stuff. How are you, Jeff?
Hey, good morning. I'm fine.
Lovely to see you. So, can I just start off our discussion this morning with, after all of, extreme volatility would be a characterization of the last month or 6 weeks, record-breaking highs in January for gold. It's been a bit dull this week.
It's not dull, Tim. It's a very welcome period of consolidation.
That's what I was looking for. That was my phrase.
Yeah, it is exactly. If you remember when we were first in January, we were kind of doing twice a week. There was enough going on.
Yeah,
and then it kind of eased back. But I felt myself that the size of volume going through the markets was actually too much for the market.
Yeah, you've been saying that for...
And it really needed to calm down. Yeah, we were having trading volumes, and that's difficult to get. What does this really mean? But 600,000 contracts on the COMEX futures on a daily basis, I'd never seen before.
Yeah.
And there were day after day after day. And guess what? We've now gone back to the complete opposite. So average trading volume, 200 to 250,000 contracts.
Really? A third?
Yesterday, 90,000. Right, the day before that was 80,000. So the last 2 days trading, the volume has just disappeared.
Yeah.
But why, Tim? Something happened this week.
Chinese New Year.
Yes, and
Chinese New Year is the first thing that comes to mind. You'll have to...
Ramadan.
Oh, of course, I'm sat in the middle of it. Yeah, you're right. Good point.
And for the Christians, Ash Wednesday, the first day of Lent.
So attention is certainly diverted then, isn't it?
Look, I think it's just a lot of people have got more on their mind than thinking about gold. So the trading volume has simply gone away. I think we're going to see some interesting action today. We've got the latest GDP figures from the US and also something that they call the PCE index. It's the Personal Capital and Expenditure Index, which is watched by the Fed very closely when determining their monetary policy. More so than if you like the Consumer Price Index or Producer Price Index. The Fed likes the PCE index. We have that today, and that could cause a bit of a shock one way or the other.
Okay, so we've seen this week, and I'm going to quote back your report. I think it was Monday, your report. Pretty decent directional call that you put forward. Pivot a $400 trading range round about the 5,000 level. Over the course of this week, it's been exactly that, hasn't it? Hovering 4,900, 5,000, nearer the 5,000 level all week.
Yeah, so it keeps coming back to 5,000.
Yeah.
And this, it's almost the new gold standard is 5,000.
That's right.
And it is quite incredible when you think, if we'd have been having a conversation 6 months ago and talking about, is 5,000 possible? The answer would have been no. And now it's just, regular. There it is, 5,000. Gold is at 5,000. There's no great shouting from the rooftops about it. But it's forming a base. It's forming a base that will give us the underpinning that's required before we go for fresh highs later this year.
The 6,500 level.
6,500.
We've been quoting so much. No, it's right. I mean, it's the very sort of definition of the new normal, isn't it? Certainly in gold terms.
It is, yeah.
I wanted to talk to you about silver today because you sent me a piece the other day by Ahmed bin Saleem, who is executive chairman. He's the chief executive of DMCC, friend of yours, of course, as well. Yeah. And I think silver is such an interesting story at the moment. His piece is entitled "The Silver Renaissance: Transformation from a Volatile Byproduct to a Strategic Asset." And it's a really good read, but I wanted to summarize it because it's quite long, and there are a few points that really jump out. The first thing I thought was his commentary on structural undersupply and how silver shifted from being kind of a cyclical precious metal to a scarce sort of strategic asset. So I wanted to ask you this. What are the long-term implications of 5 consecutive years? Because that's really what we've seen of supply deficit.
Absolutely. And, you know, the Silver Institute in Washington is run by a good friend of mine, actually. And they're predicting 6 in a row, another year of significant structural deficit. So we're talking about new production of silver against the annual consumption. Now, that will be the 6th year in a row. I got some numbers here. So I looked at that myself. So in 2025, there was a 95 million ounce deficit, more silver being consumed than produced.
Yeah.
Okay. That was, doesn't seem to say, 95 million ounces. That's $7.1 billion.
That's perspective.
That is a lot. Yeah. Now, over the 5-year period, 5 years, and the deficit over 5 years, 820 million ounces. Okay, that's $61.5 billion. So there's always been, certainly since 1978 to 1980, was the period of time where there was a corner, there was a group of people in the world who wanted to corner all the silver, buy all the silver in the world, and determine the price. And the Middle East was a big part of that, actually. And but it ended up with a lot of silver in London, in the vaults in London. So much so, I remember when I was running the precious metals desk at Samuel Montague, one of the 5 members of the gold fixing, we almost thought about just leaving the silver on the sidewalk because there was nowhere to put it. We had so much, the vaults were full up, and it was really, and it's, when silver is shipped, it's not shipped as a precious cargo. It's not shipped as a precious metal.
I didn't know that.
It's an industrial metal. And so gold to ship silver, gold around the world is very expensive because it's high value. Yeah. And it's a precious metal. It's a valuable cargo. Silver is not. It's treated as normal cargo, not precious. So this has been the reality of silver for many, many years. What Ahmed is talking about here, silver has become precious. Yeah. Silver has become something that it was never thought to be. So it's scarcity and it's completely changed character. And silver has a lease rate. So silver lease rates at the moment, if you need to borrow silver, you're going to have to pay about 15% per annum. If you're short silver and you need to borrow it, even if you're JP Morgan or one of the big banks, if you haven't got silver and you don't deliver in, you have a problem. So we have this deficit that we now will have for 6 years. What do we do about that? There's one thing that will correct it, and that's the price. The higher it goes, it could bring scrap silver onto the market. This is why I'm beginning to reconsider my $150 high for the year.
Well, you were 125 and then 150.
I'm thinking about going a bit higher, Tim.
Are you really?
I am, yeah. I think Ahmed's article is probably the best piece of analysis I've ever seen for silver. Honestly, it's so understandable. It's written in words that means something to the man in the street.
Well, that's what hit me, because I looked at it. The first thing, you send me stuff quite often,
Yeah.
and reports obviously, and
Yeah.
I read most of them. I got to be honest. I saw that and I thought, oh, that's really long. But I sat and read it, but he sectioned it
Yeah.
in such a way that it
I think
is
that's
a
a good
really
idea.
good read. The other thing I thought, that the thing that jumped out next from this is market volatility and monetary policy, and the question over the whoosh shock, if you like, in quote marks, the expectations of tighter monetary policy and how that contributes to the extreme volatility that we've seen, continuing to see, I suppose. And the paper market reset in 2026. That was the next thing that jumped out.
Yeah, that it is really interesting because he is hawkish. He is known to be very tough on if you like, printing money. And the way to restrict the money supply is, if you like, don't keep buying paper. So if the Fed keeps buying paper from the market, it puts liquidity into the market. And he's the opposite of that. But he's also a believer in low interest rates.
Yes.
There's the rub, because you've got, just with his appointment, it's confusion. And silver did come under huge amount. I think one day was 30% decline in one day. But it had gone up about 160% in the sort of 18 months before that. So you have to put that into context. Silver is volatile, and it's been volatile always because it is not as liquid as gold. See, with gold, central banks hold gold, and if necessary, they could intervene. But central banks don't hold silver. They don't. And it's very interesting that what we've had this year is China declaring silver as a strategic metal of importance to the country. So is America. So on top of having this situation where more silver is being consumed and produced every year, you've got the major economies of the world saying, we believe silver is a strategic metal, which that is not a bearish comment.
No, it's not a geopolitically relevant comment.
It is, but it isn't about geopolitics and warfare. And this is about two major economies saying we need silver.
Yeah,
and there's not enough.
Okay. The gold-silver ratio was the next point in the article that kind of jumps off the page, from over 105 to 1 to below 44 to 1. It's a big change. What does that compression suggest about silver's relative value, first point, and what potentially does it mean for the price trajectory if we continue in a bull market?
Absolutely. Well, first of all, the gold-silver ratio is popular trade in the trade. A lot of professional traders like to trade the relative value of silver versus gold. Gold is the basis. Okay, so when you look at this, if it's 105 to 1, it means 1 ounce of gold can buy 105 ounces of silver.
Yeah.
Now, that went down, that 1 ounce of gold, although it's record levels, could only buy 45 ounces of silver. But the lowest I've ever seen is 10. Me, in my career, 10 to 1. Because back in 1980, at one point, we had gold at $500 an ounce and silver at 50. Yeah. Even I can do that math. So, and then I've seen it when we went into COVID, and the fact that metal couldn't move around the world, and the economies would be collapsing and blah blah. It never happened, of course. But then silver versus gold, and gold was the go-to safe haven. That went to 125 to 1. So I've seen 10 and traded and to 125 to 1. It is simply that relative value, but it does tell you that silver is in short supply.
Okay. The next point. See if we can get it. We've got time, actually. That's good. Demand, industrial and technological demand was the next point that I wanted to bring out. How emerging technologies like, it's just solar cells, advanced solar cells, electric vehicles, battery prototypes, that kind of thing. Yeah. How emerging technologies are reshaping global silver demand, because it's a transformation, isn't it, into an industrial metal? But it's more than that. It's a critical industrial metal.
It's always been an industrial metal. The big demand for silver always was in the photographic industry. When we had in the old days of films, when you're with the camera and you put your film in the camera.
I miss those days.
Yeah, that's right. Well, then that's all using silver. Yeah. And it was the photographic industry that used silver more than anything else. And but now it's evolved into something a lot broader, a lot wider. And this is the difference between gold and silver. Gold is lovely. Yeah, it's shiny. It's a nice, shiny asset.
Here's the Jeff Rhodes that we know and love.
But it's actually not used too much in anything significant. A little bit in electronic.
Yeah, a little bit, but not so much.
But it's jewelry. Yeah. It's jewelry and investment demand. Silver is not. It's really, really necessary. And we're seeing AI. I mean, everyone's talking AI. AI uses a lot of silver. Okay. Yep. We're talking solar energy rather than the petrol and so on. Solar uses a lot of silver.
Yes.
EV, electronic cars, uses a lot of silver. So, where the world is going, it's going towards a world that needs more and more silver. Now, problem with silver is the supply side. Did you know that 2/3 of silver is simply byproduct?
I know that only because you've told me that before.
Yeah.
But
when you dig gold out of the ground, you get silver. When you dig copper out of the ground, silver. Aluminium, zinc, you get silver. And it's always that's been a good thing and a bad thing. Because it's a byproduct, what is the unit cost of producing 1 ounce of silver? We don't know. It's an accounting entry. It depends on how the mining company looks at it. Yeah. So it's very difficult to know the base price of silver. So that's one of the issues. But really, it's not. If you want to find where are you going to get more silver from? I don't know, because if you find a new source of silver, and there's not that many, probably takes about 10 years to go from mine to market. And so it's really difficult to see if this squeeze on silver physical demand really continues. It's difficult to see where the silver is going to come from, other than from households. Because certainly in India and globally, so many people keep silver tableware.
Yeah, they do.
Knives and forks and cups and saucers and plates. Yeah. And you're a bit too young to remember this, Tim.
Thanks.
But when silver did the last iteration of what we're seeing today, when it went to $50 in 1980, in Hatton Garden, famous street in UK for jewellery, there were queues miles and miles long to take their silver into Johnson Matthey to get rid of their scrap, what they call scrap silver.
Selling your granny's old cutlery.
Yes, exactly.
No, I can picture it.
Yeah. So,
but I mean, I'm very aware of that. But there is a limited supply of that available.
There is.
If people turn around, but you're right. There isn't enough. There's one more thing I wanted to bring up, and it's from the article, from Ahmed bin Salem's article, and this is Dubai's role, how Dubai is positioning itself. And you're a friend of his. I know you're well connected with DMCC. Yeah. Here's what he said, and I thought it was really interesting. He said, in Dubai, DMCC has been working towards modernising silver's narrative through strategic foresight and digital innovation. And he pointed to the world record 1,971 kilo silver bar that was unveiled on National Day last year, 1971, 1971 kilos. Not just a physical spectacle, not just because we get a Guinness World Record and there's marketing aspects behind that and everything else. He says it was a calculated signal to position Dubai at the heart of the trade.
Absolutely. Absolutely. It's actually spot on. And because silver, in many ways, hasn't really had a home. Because of that byproduct situation, well, Ahmed knows silver has been my passion ever since I predicted the annual average price to descend. And so there was I don't know why I did that, but I managed to do it. But he agrees with my view that silver is much more useful and is really central to the global economy. And it has a history, really. I mean, we know 30 pieces of silver is often referred to.
Sure.
You know, and so silver was the original money. And I actually think it's on the way back to certainly challenging gold's role as that source of value, because it's not only a precious metal, but it is that industrial metal. And for me, the combination of the two is the biggest plus and not the biggest minus.
Well, that's the winner to me.
That's the winner.
Yeah.
And he's absolutely right.
Yeah.
And Dubai is really positioning itself as the focal point. And after all, look at where we are in the world. We're in the middle of the world of global physical precious metals.
Yeah.
And I think it's quite amazing. The job that DMCC is doing, you know, I'm a big fan because I was there at the creation of it. And so for me, I'm just delighted to be part of this kind of, we're making history. We're living history in Dubai at the moment in many ways, but particularly in gold and silver.
You do love your silver. I have noticed that. I got to be honest, I would have silver over gold any day of the week.
Yeah, absolutely.
Last thing I wanted to bring up with you today was is it Thursday? It's your Thursday reports always have terminology of the day.
Yes.
And you did let the cat out of the bag last week and said, look, it's basically an A to Z and I'm filling space.
Yeah, it's a filler.
It's a filler. But the thing is, it's funny. You never know what's going to work and how it's going to work and why it's going to work. But your word last week was assay, the determination of the precious metal content of an alloy. I didn't know that, so I learned something then. Learned something this week as well, bullion.
Yeah.
Where this comes from, the generic word for gold and silver in like a bar, you know, an ingot form, originally meant mint or melting place from the old French word bouillon, which means boiling. I didn't know that.
Yes.
I thought that was a stock cube until you put it into writing.
Oh dear. Well, there's a new one today, but we'll talk about that next week.
I'm saving these. I tell you.
I'm going to tell you what carrot means.
Oh, I like it.
That's for next year.
If nothing else, Jeff Rhodes, you're adding to my vocabulary, and I thank you.
You're welcome.
Lovely to see you. Appreciate you coming in. Thank you. Jeff Rhodes, Principal Consultant at Rhodes Precious Metals, with us at Mira Business FM.